The purpose of this lab is to be able to apply the 5-step zoning process toward identifying a quality supply zone. In the first part of the lab, we will focus strictly on the zone structure odds enhancers, strength, time, and freshness for scoring our supply zone. Now, there are two supply zone formations. You have a rally-based drop, and then we also have a drop-based drop. So while in the first part of the lab we will strictly focus on the zone structure odds enhancers, you will have an opportunity to go through the 5-step zoning process for each of the supply zone formations. All right. And then as per usual, as we are going through the lab, I will demonstrate the exercise, and then you will have an opportunity to conduct several exercises on your own. So you can see here on the right end of the screen, I've already scored one particular zone. Remember that in the 5-step process, we always start with current price, and then we move up and left sequentially, going candle by candle. We don't cut through any candles. We continue to move up and left until we can find a very strong explosive drop in price. All right. We also want to make sure that we identify the supply formation using the base isolation technique, which is a 3-step process. Once we've done so, we place the proximal and distal lines, and then we can begin scoring the zone formation using our zone structure odds enhancers, strength, time, and freshness. So if we look at this zone here, we go up and left looking for an extreme or explosive drop in price, and we find this one here. And looking at this particular zone, when we look at strength, we see the move out beyond this base, okay? But the move out does not quite make it equal to or greater than 2 to 1, okay? Move out stops a little short, okay? We also want to be able to identify opposing demand zones, okay? And in this case, we can see that we have a drop base rally formation, which would make this a demand zone here. And on a drop base rally formation, we're going to place the distal line at the lowest wick within the entire formation. So I have that identified by this long blue line here. Okay, so we see strength does not quite break beyond this distal line. Okay, so strength in this case would not get any points for move out. It would not get any points for breakout. So if this was an actual trade we were thinking about placing, we would not continue to score this zone. We would delete the zone and we would look to find another zone. Okay, but for purposes of example, we can see that we have the leg out candle here and the leg in candle here. Whenever you're moving to identify the base, you always want to find the explosive drop in price and then move to the origin of that explosive drop. Okay, when referring to our supply zone. So we have this candle closing beyond the range of the previous candle. We go to the previous candle and see that it closes beyond the range of its previous candle, but its previous candle does not extend beyond the range of the base. Okay, so that makes these two candles basing candles. We see that this candle closes beyond or it closes within the range of this candle, but this candle does not close beyond the range of the base. We come one candle over, same difference, closing within the range. In this candle, if we move our vertical line out of the way, we can see it closes outside the range, and this candle extends beyond the range of the base. So that means all these candles here are our basing candles. So we would then place a vertical line on our leg out. We place a vertical line on our leg in, and we count the number of basing candles that we have here. 1, 2, 3, 4, 5 basing candles. Anywhere between 4 to 6 basing candles is going to give time half a point. All right. And then for freshness, we see price has left the zone. It has not come back yet. So freshness is going to earn full marks, 2 out of 2 points. Okay, so now we are looking at Apple, and you will have an opportunity to score this zone on your own. And we are currently looking at a 15-minute chart, and our zone is drawn between October 28th at 11:45 a.m. and October 28th at 12:45 p.m. All right, so if you'd like, you can go ahead and pull up your chart. Um, Open it up to Apple, place your time frame on 15 minutes, then go ahead and go through the exercise, and once you are done, unpause the video and I will display the correct answer. Alright, the correct answer is... Alright, so hopefully you were able to see that strength scored 2 points, time scored 1 point, freshness scored 2 points for a total 5 out of 5. So let's go ahead and go through this. So again, using the 5-step zoning process, we always start with current price. We look up and left looking for an explosive drop in price. All right. So we see that there's an explosive drop here, and we see that this is the origin of this explosive drop. If you recall, whenever it comes to gap candles, you basically just want to identify whether it's a drop or an increase in price, and then you are going to color in that particular candle appropriately. All right. So at any rate, we now move into the 3-step base isolation process. Now that we've identified the origin of the drop in price, we see that obviously this long candle here that we have to imagine closes outside the range of the previous candle. This candle closes in the range of this candle. This candle closes outside the range of this candle, but this candle does not extend beyond the range of the base, meaning it's a part of the base. We then come to the next candle. We see that it may close outside the range, or actually no, it doesn't. It closes within the range of its previous candle, and the previous candle here does close outside the range of the base. Not by much, but it does nonetheless. Therefore, that makes it a leg candle. So we then take our 2 vertical lines. We place one on our leg in. We place one on our leg out, isolating the base. Having done that, you are now in the position to place your proximal and distal lines, in which case the zone is already drawn for you. All right, so now moving into scoring the zone, we can clearly see without drawing boxes or calculating prices, we can see that the move out is clearly equal to or greater than 2 to 1. The next process, this chart was a little cut off, so hopefully you were able to pull up your own. But if not, no worries. You can see that if you would have identified this demand zone here, you can see that we have a rally, base, rally formation. And if you recall, anytime you have a rally, base, rally, the lowest wick within either the base or the leg out candle is going to serve as the area where you will place your distal line. All right, but being that this portion was cut off, you could have identified this demand zone here, in which case it looks like we have a bit of a drop base rally. Actually, this formation is a little bit funky, but we have an area that signifies buying. You can see the gap up here. We have a distal line placed at the bottom of this candle, and we can clearly see that price breaks beyond that price point as well, giving strength. 1 point for move out and 1 point for breakout. For time, I put in 1 point. This is actually incorrect. It's half a point, so my apologies for that. We see that we have 1, 2, 3, 4, 5 candles between our 2 vertical lines, which gives time half a point. 1 to 3 basing candles is 1 point. 4 to 6 basing candles is half a point, and anything more than 6 basing candles is 0 points. And then we can clearly see that price has left the zone, it has not returned, and therefore freshness would get full marks, a full 2 out of 2 for freshness. All right. All right, so now go ahead and pull up Bungie Limited. Ticker symbol is BG. We have a formation here that looks like a rally-based drop formation between the year 2008 and 2009. And again, we are on a 1-month chart. So go ahead and pull up this on your supply zone on your preferred trading platform, and then again your time frame is going to be 1 month. Go ahead and score the zone for strength, time, and freshness. And once you've done that, unpause the video, and then I will display the correct answer. Go ahead and pause the video now. Alright, and the correct answer is 2 out of 2 for strength, 1 full mark for time, 2 out of 2 for freshness, and a total 5 out of 5 possible points. Alright, so let's go through this. We're coming up and left, looking for an explosive drop, which we can see here, obviously. Moving to the rally, or I'm sorry, to the origin in the drop in price. I did draw this zone incorrectly. That's my apologies. It should be drawn here. Hopefully you were able to catch that. If not, no worries. But we see that all of these candles here close outside the range excuse me, of their previous candle. This candle closes within the range of this candle. This candle closes within the range of this candle, and this candle extends beyond the range of the base. Alright, so this would be our leg in candle, and this would be our first leg out candle, giving us 2 candles located between our vertical lines, isolating our base. And then from there we would simply draw our proximal line at the bottom of the lowest body and the distal line at the highest wick. Okay, and then from there we can begin scoring the zone. Now clearly we can see, or actually we'll just measure it out anyway. Oops, that's the wrong tool. Giving me a little difficulty there with drawing the rectangles. So that was a little bit glitchy. There is a feature in this software that automatically makes it jump to the top of any particular location, whether it's the highest wick or a candle body. But at any rate, we can clearly see that the move out is equal to or greater than 2 to 1. This demand zone, if we could have identified that, we can see that this would be our leg candle in. This would be our one basing candle. This candle here does not quite make it beyond the range of this candle, but this candle over here does. So we could see that this would be the base within our demand zone. This would be the bottom of the lowest wick, where we're going to place our distal line, and we can see that price clearly moves beyond this particular price point. So in this case, strength is going to get a full 2 out of 2 points. Okay, so for time, we simply count the number of basing candles between our 2 lines, in which case we have 2. So anytime you have 1 to 3 basing candles, that's going to earn you full marks for time. So 1 out of 1. And then for freshness, we can clearly see that price left the zone and hasn't returned, so freshness gets a full 2 out of 2 possible points. Alright, this time you will have the opportunity to go through the entire 5-step zoning process on your own. You will then isolate the base using the base isolation technique, place your proximal and distal lines, and then score the zone for strength, time, and freshness. Alright, we're currently looking at forward. We are on a 1-month chart, and I want you to look at the area between 2001 and 2002. You see this little purple line here? This is current price. Alright, so you're going to look above this purple line, and there are at least 2 supply zones that I want you to identify between 2001 and roughly 2020. All right, there is a, well, actually, I won't tell you the formation. You can figure that one out. All right, so between 2001 or above 2001 and 2002, you should find two formations. Both supply formations are there. All right, let's go ahead and pause the video, go through the 5-step zoning process, isolate the base for both supply zones, place your proximal and distal lines for both supply zones, score both zones for strength, time, and freshness, then unpause the video and I will display the correct answer. Go ahead and pause the video now. Alright, and the correct answer is, looking at our top zone here, strength earned 0 points, time 1 point, freshness 2 points for a total 3 out of 5. And looking at this bottom zone here, strength earned 2 points, time earned 1 point, and freshness earned 2 points for a total 5 out of 5. So let's go ahead and go through this. We'll start with our bottom zone first. Assuming that this is current price over here, we come up and left. All right. Looking for that explosive drop. So we have this candle here closing outside the range of the previous candle. We come up. We see the previous candle closes within the range of its previous candle. We see this candle closing within the range of this candle, but this candle extends beyond the range of the base. All right, so again, looking at the bottom zone, we have our leg in candle here, and we have our leg out candle here. All right, so to place the proximal line, we're going to go to the bottom of the lowest body within the base. That would be here. And then we go to the top of the highest wick within the base, which is here. All right, and that would give us our supply zone. All right, from there, we can measure the height of the zone for strength to identify whether or not price moves out equal to or greater than 2 to 1. We can go ahead and stack our boxes. And we can see that price clearly moves out equal to or greater than 2 to 1. So strength gets 1 point for move out. And then when talking about breakout, again, I keep emphasizing it, you have to be able to identify opposing zones. So to do that, you're basically just going to start at the base, and then you're going to look left on the chart. All right. So again, when looking for demand zones, and I don't think I explained it this way before, if you're scoring a supply zone, trying to find a demand zone, you're going to do it similar to the way you look for a demand zone when you start at current price. You're going to move down and left only. So from here, we just come left, and we can automatically see that we have a demand zone here. All right. So we have a drop, base, rally formation. Okay, that's going to be key for identifying your zones. You want to be able to identify the formation right away. And if we were to place a price point on the distal line, we know that the top of the highest body in the base is where we would place the proximal line. And on a drop, base, rally formation, the distal line would go at the lowest wick. In this case, it's in the base, and we can clearly see that price moves beyond the distal line of that demand zone, giving strength 1 point for move out and 1 point for breakout. All right. The next is time, in which case we're just going to count the number of basic candles between our two vertical lines. We have 2, so in that case, time earns full marks, 1 out of 1 point. And then for freshness, we can clearly see price has not returned to this zone, nothing but empty space, so freshness gets 2 out of 2 points. All right. Okay, wanted to clean up the chart a little bit. Now looking at the second zone, all right, we continue moving up and left, looking for an explosive drop. Now in this case, the leg in candle for this zone is going to be the leg out candle for this zone. Alright, so hopefully you were able to see that. If not, no worries. But this is going to be a candle that closes outside the range of the previous candle. The previous candle closes within the range of its previous candle, so on and so forth. This candle closes in the range of this candle closes in the range of this candle, and this candle extends beyond the range of all of our basic candles. Alright, so we can place a vertical line on our leg in candle and place a vertical line on our leg out candle for this top supply zone. And that will isolate our base so that we can place our proximal and distal line. Now, in order to do that, this was a little bit tricky. You can use your price point tool and kind of look to see where this candle closes at 27.81. For a green candle, you want to check where it opens at 27.81. And this candle closes at or opens at 27.80. So our proximal line would go at the bottom of this candle here, and our distal line, we can kind of see how these almost look similar, and they may be. This one has a high of 31.42. This one has a high of 31.37. So our distal line for our supply zone would go at this wick here. All right. And sometimes it is a bit tedious, but that's how you would navigate around that in order to place your proximal and distal lines. All right. So now that we have those, we can begin scoring our zone formation. So looking at strength, we want to see if price moves out equal to or greater than 2 to 1. And clearly we can see that it actually doesn't. If we follow this drop in price, we can see that price doesn't move out any farther than this. It starts to turn at this price point. So in this case, for move out, strength isn't going to earn any points. Again, looking at the previous zone, we identified this opposing demand zone here, and we still have our distal line for our demand zone. And for this move out in price, price does not move beyond this distal line. So in this case, strength would earn 0 points. And if you recall, anytime you are scoring a zone, if any of your odds enhancers, regardless of which one it is, if it scores 0, you are not going to place a order at that particular zone. You're basically just going to delete that zone and move along to find another. All right, so hopefully you were able to identify both those zones. If not, no worries. Go ahead and rewind the video and go through the lab a second time, at least until you've gotten it down and feel pretty comfortable with going through the zoning process for both supply zone formations, your drop base drop and your rally base drop. Get used to going through that 5-step zoning process. Get used to the 3-step process with isolating the base, and then get used to the process of scoring the zone for strength, time, and freshness. Understanding this process is going to be very key with being able to identify your zones. And being able to identify your zones is going to help you determine where the unfilled orders are when you're looking at a chart, and that is where we want to place our limit orders. And from those zones, we will determine our entry as well as both our exits, our stop loss, and where we want to take profits in the event that the trade goes in our favor. So you really want to make sure you understand this portion of the course. All right, so you have this portion where we are going through the 5-step process for scoring the supply zones. You may need to go back and review the portion of the course where we go through the lab and the 5-step process for identifying demand zones. But this is going to be very integral, so do not go any further until you make sure that you have this process down. All right? Hope to see you in the next video.